What's going on, everybody? Excited to have everybody on the call. Thank you so much for joining us. Without further ado, we are going to get rocking with today's presentation. Once we go through the presentation, we'll do a Q&A session at the end here. It's probably where you'll find the most value. If you have questions as we go throughout the presentation, I just ask that you use the Q&A section and be answering your questions one by one in the Q&A. So make sure that you put those questions in there so that I can keep track of them. Otherwise, if you put them in the chat, then we're not going to be able to really keep track of those. So definitely make sure that that those questions, you're putting those in the Q&A, and we'll definitely get all questions answered as we kind of go here. I'm super excited. I hope you guys are excited for today's call. Realistically, there's no better topic to talk about than alternative funding sources for small businesses. At the end of the day, there's still a statistic that exists that 7 out of 10 business owners don't know that they can't get financing outside of their local bank. That's a crazy statistic to me. There's 33.5 million small businesses in the United States. That's a lot of people. When you talk about 70% of the people who then apply for a loan believe that that's their only option, and banks typically decline upwards of 80-90% of the borrowers that apply with them. That's a crazy statistic that we're talking about. It's the majority of the market, realistically. So it's important that everybody understands what's available to small businesses. Now, the one thing I can tell you is this is a dynamic topic. If we do this webinar again in 6 months, I can assure you we're going to be talking about different products, different resources, different qualifications, different industries getting different loans. So just make sure that you understand that this is certainly a moving target, right? Anytime you talk about lending is based on risk. So at the end of the day, as risk factors change from the economy to the businesses to industry trends, all of that stuff is going to affect the lending that goes on behind the scenes. So it's important that you really understand that type of thing, that part of things as we get going. There we go. Sorry, I was moving a little quick there. So what is so important? Why is there an importance? Well, that's exactly what I was just telling you about. It's a majority of the small business market that isn't qualifying for the funding that they're looking for. So how do you then start to piece together what it is that you're going to be able to offer them? Well, you have to look at what's already available, right? And that's the traditional thinking. So what do traditional lenders look for? Well, they have an extremely limited risk tolerance. It's extremely time consuming and document intensive to get through their process because, I once heard from a banker, shout out to this banker, but they told me that banks always like to give out umbrellas when the sun is shining. And that one hit home for me. I really understood what they were talking about, that banks like to lend to the cream of the crop, right? They want great opportunity. They want great businesses who are facing these great opportunities. They're in great areas. They are in a great industry. Everything has to be checked off for traditional lending. And there's nothing wrong with that. A certain portion of the market is going to meet those qualifications, but a certain portion of the market may not. Right. So that's why we got to understand, what are they actually looking for? Well, they're looking for collateral, right? They want to know that you own your building or that you have receivables or some form of collateral going into the deal, right? They have strict credit requirements and they want to look at your financial performance. And realistically, they're also going to look at your relationships with them and other lenders, right? They're going to look at the credit score and they're going to look at the credit quality. But if you have a relationship with the lender, that's also going to go into things here, right? If you've been banking with the same bank for 20 years and now you're going to go get your first loan after 20 years in business, you might have a good shot. But if you just opened your account 3 months ago, do you have the same type of opportunity? Absolutely not. And that's what we are here to explain, is those differences, right? So what is it that would cause a client to not qualify, or what does it take for them to actually qualify for traditional lending, right? So an excellent credit score, right? So you might be familiar with the FICO credit scoring system, right? There's tiers in credit, right? There's poor, there's good, there's average, there's great, there's excellent. Banks look for excellent credit when lending to small businesses. Um, I firmly believe that small business lending is probably the riskiest portion of a bank's portfolio, because it's where they have the least amount of security, right? Um, Somebody's not going to default on a mortgage because it's for their home. Their business loan, though, it's a little different, right? You're not as tied down to that same type of that same type of product, or you don't necessarily need all that security. If you don't own your business, you might be able to go get a job and still afford your mortgage, right? So do they have collateral, or do they own their building, right? They want to know that they're able to add extra protection to these deals, because even if they do cash flow, if these deals cash flow, right, and they meet the credit criteria, but there is availability for banks to take collateral, they're going to do that. They put what's called a blanket lien out, and they put a lien on all of your collateral, from real estate to receivables to equipment, right? And any other things that the business may own, they're putting a blanket lien on, because when push comes to shove, they want to make sure that they get paid, right? Have you been in business for at least 2 to 3 years? And I stress the at least, because banks really look for 2 to 3 years of profitability. And if business owners, a lot of times they're getting, they're being consulted to not claim profitability in their first couple of years. So it really is a catch 22 that you have there. Yes, you may save, in terms of tax liability, because you're not as profitable of a business. But at the end of the day, are you also hindering your growth because now you can't go get access to capital, right? So it's important that you understand that these businesses also need to be profitable, right? And that's where it comes into maintaining healthy financials. That has to do with their bank statements and how much cash flow they keep, and the cash that they keep on hand, and ultimately where they're spending their money, and how they make their money, how often do they get paid. All of this goes into the risk factors that are associated with any particular deal. So when you really what you really want to do is understand that literally every box is checked, right? That's traditional lending. It's very black and white. You either qualify or you don't. And the second you don't meet a criteria, it's a decline. They're not going to look to extend money to a business that isn't profitable. They're not going to look to extend money to a business owner who doesn't have excellent credit. So it's important that you understand it's not just meeting some or even one of these criteria. No, it's you have to be doing a mixture of all of these things. So it's very important that when we start to talk about alternative financing, the first conversation that we actually have to have is about is actually about traditional financing, and understanding what does that look like right now. The other thing that I want to mention before I even dive into some of the frequently asked questions here is that traditional financing right now is even expensive. If you look at prime rate, I believe prime rate is 8.25. I'm sure somebody in the chat could probably correct me if if I'm wrong there. But at the end of the day, that's expensive, right? Especially when we start talking about how long is the rate going to compound? Is it 10 years? Is it 25 years? Right? So just make sure that you really understand the different deals that are available, and really, really understand that when it comes down to it, cost is a relative term. You really have to understand what is it that the business owner ultimately qualifies for, and how are they utilizing the funding, right? So that's where alternative funding comes in, because if you have a business owner, like I said, that doesn't check the boxes, you really need to make sure that, hey, what are the other opportunities that might be out there for them, right? So what are the alternative funding sources? How do alternative funding sources differ from traditional lenders, right? And how can I determine if my clients are actually going to qualify? These are all things that we're going to go over in the presentation, right? So it's important that we really, really kind of dive into things so that you guys have a full understanding of the entire market and what it looks like, right? So how could a business improve their chances of obtaining funding once they hit the alternative market? Well, the number one thing that all lenders in alternative finance look at is your use of funds. They want to know that you're putting the cash, or you're putting the money that they're giving you towards business purpose, right? So it's important that you really outline what that means, right? Working capital is a broad term. You may not want to say that one. Marketing is a broad term. You may not want to say that one. You want to let them know, hey, when I use this marketing, I'm updating my website, or I'm adding new lead sources, or I'm hiring employees, and those 3 employees that I'm hiring for the position that I'm hiring typically bring me X amount of dollars per month. These are all things that you want to explain in your use of funds or on behalf of your customers, because at the end of the day, this is what the lenders are making their decision on. They're going to decide whether they actually want to lend to the situation that your customer might be in, right? The other thing that they can do is maintain healthy cash flow, right? What I mean by that is the second thing that lenders are going to look at outside of why are you using the money is that you can actually afford what you're applying for, right? So it's important that you understand, hey, could I afford a payment? And when could I afford a payment? Do I have a cash flow crunch every few weeks in my business where it might be hard to afford a payment? If so, it's important that we understand, will this cash that I'm going to get, or this loan or line of credit or any type of funding that I'm looking to get, will that cause even more of a cash flow crunch, right? So it's really, really important that you really understand cash flow, how the business works, right? And what the opportunity is. Then you got to compare the options. I assure you, every business is going to have options these days on the alternative market. If you are somebody that is looking for it, you will find it. But you really want to understand, what are the fees and interest associated? What are the terms, right? If it's structured too short, can I afford the payment? If it's too long of a term, does that mean that I'm paying too much for the money and it's going to cost me more because the term is longer, right? How do you answer these questions? Well, you can seek out help from a company like ROK. We're right in the epicenter of essentially the entire business funding marketplace, right? Well, it says the ROK Financial marketplace here, but that's because that's the approach that we take. We offer a lot of different funding through our platform, right? So when you look at a company like ROK, you're going to get access to all the different types of funding that might be out there, whether you're talking term loans, lines of credit, you're talking online lenders, you're talking money from private equity, right? Like, we're not going to give you equity, but our lenders might be backed by private equity, right? So you got to understand that, when you're working with ROK, we're going to basically take a deal and see what the marketplace has to say for it, right? So it really gives you a good idea of what's actually available. Some of the other places that you can go for alternative funding, right? If you have an Amazon store, I know they offer funding based on your sales through Amazon. Shopify is very similar. Same thing with Square. If you do processing through Square, they'll offer you money and you can get access to money through them, right? These are major, major, major corporations, right? PayPal offers lending. Goldman Sachs offers lending, right? PayPal was founded by Elon Musk. He was one of the founders, one of the richest people in the world, right? Jeff Bezos, he owns Amazon, one of the richest people in the world. They're in this industry. They're in it for a reason. It's because there's a real need. They're servicing a need, and by servicing a need, yeah, they'll make a little bit of profit. There's profits in this, but at the end of the day, the need has to be serviced, right? So it's important that when you start to understand if this is something that you're going to look to offer to business owners or to your customers, right, that are business owners, that you really, really have a good understanding that there is a need. It's not like it's irrelevant, right? Here, what we're doing is we're getting you access to funding that most people just simply don't have access to, right? So I want you to really understand the ROK side of this thing, right? Apologize for the shameless plug here. I know there's some new people on, or some existing partners that might not have a full understanding of ROK and what we bring to the table, right? So if you're a business owner, what you're looking at is access to better terms and lower rates. How we're doing that is because we have multiple funding options. So what we do is we take a business owner and we bring them to the market, right? And we may get 2 or 3 approvals, right? And then we're showing the lenders the approvals behind the scenes, because we share all of our data with our lenders so that they have the ability to win your customer's business, right? And we make them compete, and that's how they get access to better terms, longer terms, lower interest rates, higher dollar amounts. It's all through the ability that ROK has to share information quickly amongst those lenders, right? So you really have the advantage when you go to market, right? Because, as a business owner, you could go type in loans for, bad credit business owners on, online, and you'll come up with hundreds of options, right? How do you know which one is right? How much time are you going to sink into all these into all these apps and all the back and forth that goes into it? Well, that's where the dedicated finance advisor comes in. Every business owner is going to get their own dedicated business finance advisor that will walk them through each of the steps from applying to approvals to closing the deal and ultimately getting the funds into their account, right? And should they need money again in the future, we're also going to be there to service that. They also have somebody there that is now their point of contact, right? So what makes it different? Why is it so easy to qualify, right? What is the actual difference? Well, I know I mentioned some of the things that it took to qualify for traditional funding, but for ROK, there is no minimum FICO credit score. We don't necessarily have any industry restrictions. It's all about, hey, do you have 3 months time in business? Do you have a business checking account? And are you generating $5,000 per month in revenue into that checking account? So as long as the business owners that you're working with or you're planning on working with meet those criteria, there's options available to them. If they're a brand new startup, we might be able to get them equipment financing, and that's a different conversation. We can go into that, in the Q&A if anybody wants to learn a little bit more about equipment financing. But as far as like getting cash to a business owner today, this is what it takes. We represent the entire alternative market, right? So this is what it takes. I can assure you, these are the minimum qualifications. Now, if you're looking for a few $100,000 or a couple $1,000,000 in your business, you're not going to be able to do that at the minimum criteria. I do want you guys to know who our core borrower is, right? ROK's core borrower is actually somebody that has a year plus in business, right? They have about $1 million annually in revenue. They have a 640 plus credit score, right? So at the end of the day, there is a lot of qualified business owners who may just be missing the bank that are working with ROK as well as people who just meet this minimum criteria, have a sub, 600 credit score or even, below 550, right? We help a lot of different business owners in a lot of different situations. So it's really important that you understand. I know I mentioned traditional lending is black and white. Well, ROK Financial and alternative financing, we operate in the gray. That's why I wore the gray today, so that you guys could keep that in mind, that at the end of the day, there's going to be a lot going on. And how do you know it's the best option? Well, let ROK do the shopping for you and your clients. What type of funding do we offer? We offer SBA loans, term loans, lines of credit, working capital, cash advances, working capital loans, specialty products like equipment financing and leasing, real estate funding, accounts receivable financing, ABL, factoring, you name it. Pretty much any type of funding that a business owner may be seeking in the alternative funding space, we have access to. So it's important that you really understand we're a full service loan brokerage. We're able to offer all of these different types of funding, and each one of these buckets has multiple lenders and multiple products inside each of the buckets, so that there's a ton of flexibility in who's going to qualify for each of them. So it's important that you understand the dynamic around, hey, if somebody doesn't qualify for something, we probably have another option or maybe even two that could service the same need, right? So what does that actually mean? Well, that means all you have to do is submit your clients. We will work the deals from open to close, and then you just sit back and earn commission. It's very, very simple. All you really have to do is provide to us what we call the 3 N's: the name, number, and the need. And that's it. That's all you need, right? At the end of the day, it's a very, very simple process, and we can handle it from front to back, back to front. It doesn't really matter to us. What matters to us is that it works for you and your process with your customers and the business owners that you work with. That's one thing that I will say, right? We provide a stellar out of the box partnership experience. It's something I take a lot of pride in, how hard our team works, from marketing to biz dev to sales to operations to leads to accounting, everybody in between. We all wave the partnership banner, that's for sure. And because of that, our whole system and process is built around partners. But that doesn't actually mean that what we've built is exactly what you need. We pride ourselves in being able to customize the approach as well. What works for you, what works for the customers, right? And how can we, what works for your customers, excuse me, and how can we best put a process together that works for everybody, right? We want to get everybody's deals done efficiently, quickly, and realistically make sure that everybody has the ability to make great decisions. That's what we pride ourselves in. Yeses or nos, it doesn't really matter to us, right? So for us, what we're looking at is simply the fact that all you really need to do is focus on your business and allow us to do what we do best. That's getting all of the I's dotted and T's crossed when it comes to funding for your small business clients. You get access to our portal. In the portal, you get access to marketing material, partner support, your pipeline, right? Managing your pipeline. You can get insights into all of your fundings, past fundings, partners, all of your commissions. All you have to do is simply utilize the portal itself. There's marketing materials. I think I saw some questions about marketing materials in the chat. But at the end of the day, there's marketing materials that you get directly in the portal. There's 2 custom landing pages that you can upload your logo to and utilize for your own marketing campaigns. So if you're not already in the portal, make sure you get access. But once you are somebody who is looking to get active with us, you will have access to our CRM. That's what the portal is. It's direct access to our Salesforce CRM. And I always make this joke. Does anybody, that's on here know what Salesforce stock ticker is? Anyone? Salesforce's stock ticker is CRM. Right? CRM, they're the CRM company. So if you want to get access to the CRM, you can work through ROK. We're going to give you access to our Salesforce where you have your own user, you log in, you get access to everything. It really, really is a simple and effective way for all of us to work together. It really, really does make the process that much easier, and allows you to kind of self-service, right? You can log on at your leisure and keep up with your pipeline. And then you're going to be looking at things like this, success stories, right? I want to point out a couple things, how quickly we're able to get the money, how much money people are making in commissions, right? And the fact that it doesn't really matter your industry, right? Restaurants are super duper tough for traditional lenders. If you think about it, there's a lot of statistics around restaurants not making out of their first 5 years or 3 years or even their first 12 months of business, right? Those statistics are real because they really matter and they really happen. And because of that, banks typically stay away. I really don't know of any banks that lend money to restaurants under 5 years under 5 years in business. And this business owner was looking to purchase an additional location, but already had 3 years in business. He just couldn't get approved at his bank, right? So it's important that you really understand all of the different avenues and ways that we can get deals done and how much revenue it could potentially mean to you. It's always important that you point out our team here, right? Because without the Rockstar team, we would not be who we are, right? So I always like to shout out the team because this is who works with your clients day in and day out. And then just a couple of plugs here. I will be going live on Instagram after the call, just in case I miss anybody in the Q&A here. As we get to the Q&A, I'll be answering some questions live on my Instagram. So feel free to follow ROK, follow Tony. We're certainly following back. I mean, shoot, there are 205 of you on the call right now. If everybody followed us, that would be a lot of followers. No, I'm just kidding. I'm just kidding. That would be awesome. If you already follow us, share our profile with somebody that you know that should be following us, because that's a really great spot to keep up with all of the information, all of the marketing, and all of the insight that we that we really pride ourselves in pushing. We push a lot of that information across social media. You'll see we're real people more than anything, and that's really what it comes down to. We know when we talk to a business owner, we always operate with empathy and respect because they're real people. We really understand the scenario that they're in. When you're the employer, it's a little different. You're worried about everybody. You're worried about everybody kind of getting home and everybody, being able to put a meal on the table at the end of the day, kind of thing. And we take pride in being able to help those people. The people that are out there working in the business and don't always focus so much on their business. We help auto repair companies and restaurant owners and retail shops and e-commerce and doctor's office and dentist office and vets and you name it, transportation, towing. We really help every business owner, and I've never met one who wasn't passionate about what they did and who they helped. But at the end of the day, we're here to help, right? That's what it's all about. We'll provide a ton of value, a ton of insight. They can apply with us and really understand what it is that they're able to qualify for and how they can apply that. I believe we're pretty much wrapping up. I think it's just the thank you slide here. Yeah, so stay in touch with us, right? If you're not a partner yet, you can reach out to us right now. You can call 833-653-0653. You can send an email to partners@rock.biz. You can go to rock.biz/partners and become a partner. You can do pretty much whatever, and we will certainly contact you. I just had somebody sign up through Facebook right before the call, so feel free to utilize the social media for that stuff as well. Thank you all for rocking out with us, and being such great, such a great audience. I hope you guys, like I said, pulled some value from this.